190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is...
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Today is a very important day due to the fact we have the Fed minute, so you do not want to miss this video. But just before I start today's video, for anyone who's interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I've left a website link in the description of today's video, and I charge a very small fee of $29.99 for a monthly subscription. But that being said, I actually have an offer on at this moment in time, which is going to be valid until Sunday. So you have until Sunday to take advantage. But once subscribing to my website, when you get to the payment page, if you type down this coupon code 25 discount in capital letters and click apply, that will give you a 25% discount, meaning that the annual subscription, don't forget this is only valid for the annual subscription, instead of it being $299, it then becomes $225 for the year, which is only $18 a month. So massive discount there. It's only valid until Sunday, and what a perfect day to do it due to the fact we have the Fed minutes, and I'm going to be explaining a lot about how we're going to be trading that during today's trading session. But let's talk about the Nasdaq100. As I just mentioned, Fed minutes today, which is going to cause lots of volatility in the market. What we've seen so far is, a typical trading session when you have the Fed minutes, and this is just basically a nice slow drift. If we go onto the hour chart, you can just see we've had this real nice slow drift towards the upside here for the Nasdaq100, and that's typically what happens when you go into the Fed minutes, and then we'll get given the actual basis point hike, which is expected to come in at 75 basis points. If we do not get 75 basis points and we only get 50, I think the market falls rather sharply. I think that we'll go and take out the lows that we achieved yesterday, and we could even go down as far as 11,000, because this just basically sends out a signal that the Fed is not willing to do what it takes to combat inflation. That being said, what you typically tend to see on a Fed minutes day is that when the actual statement comes out, so when you find out whether there's been a hike or not, the market will react where it could be bullish, it could be bearish, and then of course you have a 20-minute period then and sorry until the until the actual Fed minutes conference, and that's where of course Jerome Powell answers questions from the press and of course offers his own statement. And what you tend to see is that the market reacts during the What you tend to see, is that the market reacts in the complete opposite way during the conference that it did towards the statement. So, for example, if the market rallies, so let's say if the Fed brings out 75 basis points and the market declines, okay, that's for the actual statement. And then for the conference, if the market, of course, declined during the actual statement, then going into the conference, the market will probably trade towards the upside. That's one thing I've always realized with the Fed minutes. The market always does the opposite reaction between a statement and a conference. So let's just say, for example, Jerome Powell, he brings out a 75 basis point hike. That's what the market's looking for. I think the market will react positively to that news. But as we go into the conference, I think that's when traders will start to realize how hawkish the Fed is going to have to be to tame inflation. And it's really tricky to kind of predict where the markets could end during today's trading session due to the fact you have two parties. When I say two parties, I mean two types of traders. You have the one type of trader that wants the Fed to do more. It tells them that, they're willing to do anything that it takes to combat inflation, and ultimately inflation is one of the worst things that can potentially threaten stocks. And then the second party is, well, we don't want the Fed to be too hawkish because of course higher interest rates is bad for companies. So it really is going to be bull versus bear during sessions like this. But my honest opinion, if I had to say what's going to happen, I think that the Fed will come out and offer a 75 basis point hike. I think the markets will react positively to this. We could see a nice 1% pop towards the upside, and then I think the conference will then come 30 minutes later, and I think that we will wipe out all of our gains for the trading session, because I think that Jerome Powell will come across as extremely hawkish, more hawkish than most people were actually anticipating. I think that he could potentially even line up a 75 basis point hike going into the next meeting. Even if the market does rally during both the statement and the conference, I think it's only a matter of time until we basically paired those gains. And I would actually like to take this opportunity to come out and say that, I previously said that 11,000 could be the floor here for the Nasdaq 100, and personally speaking, after doing lots of research last night, we could even go lower, guys. I really do anticipate a move lower than 11,000, because I was looking at some really interesting stats, especially with the S&P 500, and it was that there's, since the S&P 500, I actually found some data which tracked the S&P 500 all the way back to 1928, and since then there has been a total of 25 bear markets, some recessionary, others non-recessionary. So I think there's been a total of 14 bear markets out of the 25 which have happened when a recession has occurred, and then there's also been 11 when there hasn't. And it was really crazy. I think the average drawdown, so from the top of the market all the way to the bottom, so from peak to trough, the average drawdown for a recessionary bear market was 39.4% for the S&P 500, and we've only just hit 20% drawdown, and that was yesterday, of course. So that would tell us that we're pretty much only halfway through. And then for non-recessionary bear market, so the average drawdown was 26.5%, and again we're only at 20%, so we could have another 6% to fall, which kind of makes sense. That would take you to around 3,400, where my personal bear target is, my bearish target here for the S&P 500. So I think that's a pretty interesting fact, and I think the average bear market duration during the 14 recessionary bear markets was a total of 390 days, and as you can see, we're only at right now on day 165, so we'd still have a long way to go. We're pretty much not even halfway through it, if that was the case. And I think even for a non-recessionary bear market, I think it was only like 209 days. So again, we will still have another month and a bit to go. So I don't think that the worst is over yet. I think the Nasdaq 100 could potentially take out 11,000, especially if we have inflation that continues to come in higher than expected. So, it's going to be very, very difficult to navigate the markets during a trading session like today, and that's why I think it's a fantastic opportunity to have someone like myself to help you through the news and all of the noise of trading sessions, especially with the Fed minutes later on. So right now is a perfect opportunity to go and take full advantage of that 25% discount. That's why I've offered it during today's trading session, because I want you on the team so that we can navigate through this noise together, and I can help fellow retail traders. So thanks for watching today's video, guys. It's going to be extremely volatile, but of course volatility means money making opportunities, so I'm very excited to go into the Fed minutes later on this evening.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The